So today's podcast is actually a webinar recording I did very recently with my house hacking team. So this is a webinar called House Hacking Your Way, Strategy and Accumulation for Your Next House Hack. Now, I'm sharing this webinar recording for a couple reasons. One is because this year we kicked off a lot of new education around house hacking here in Denver and throughout Colorado. So this is our second webinar or class in our 3-part series. So it's a great webinar, want to share with everyone. And also I want to invite you to make sure you either attended or came to our webinars for our first or third class as well. Also, we do meetups every single month for house hacking. But the thing I'm most excited about is a few weeks ago, we published or updated the Ultimate House Hacking Guide for Denver. So it's published in 2025, talking about everything you need to know to house hack with updated numbers and high interest rates in 2025 and beyond. So if you want to copy the book, you want details for next class or meetup, make sure you email Katie at envisionrea.com, and I'll make sure her email is in the show notes. All right, with that said, enjoy the show. Hey, what's up everyone? Chris Lopez here, and I'll welcome you to our second webinar in our 3-part series here about house hacking in Denver, Colorado. So I've got 3 great people here with me today. Jeff, how's it going, Jeff?
Living it up, Chris. I can't be better. Or couldn't be better. One of those two.
You couldn't be better at being proper English, I think.
Yes.
Katie Heinsohn. Katie, how are you?
I'm good.
Yeah.
I'm just sticking in.
Good.
Safe. I'm good.
You're good. All right. Troy, you got a big thing to go up to. How are you doing?
Stellar.
Oh, all right.
Yeah. Doing stellar.
He wins on that one,
guys.
Better.
Thank you.
No, but I appreciate you guys coming in here. These webinars, these classes we teach, they're always fun. They're always informative. We always have great groups come out and see them. And as I said, this is our second webinar in our 3-part series where we want to put together, information how to house hack in Denver, Colorado in the new high interest rate environment, while also times are uncertain as well. So today we are focusing on really fine-tuning your strategy and accumulating more properties. But quick reminder on here, got a disclaimer. This is educational. We're sharing experiences that we've seen as investors and fellow real estate professionals. We're not giving you financial advice, loan advice, legal advice. Always go out there, do your own due diligence, and make sure you talk with your team to make sure you're doing the best decision for you and your situation. And of course, big shout out to Troy with Nova Home Loans, who is not just a sponsor of a lot of house hacking stuff we do here, but most importantly, he's a damn good lender. He knows the market, he knows loans, he takes the time to go out there and get to know the borrower, and about 3 or 4 times a year, we'll save a deal for one of our clients, work with another borrower that they could not write the check their mouth said. Troy comes in and saves the day. So if you guys need a great lender, talk to Troy as one of the lenders go out there and talk with, because that guy is a stellar lender.
Stellar.
Katie, what's on the agenda for today?
So we really want to kind of dive into strategy, kind of narrowing in your strategy, the different strategies that are out there and which ones will fit best and work best for your unique situation, because everybody's different, right? We really want to focus today on mindset. Mindset is huge, especially in house hacking. If you can kind of retrain your brain to have the right mindset, there's nothing that can stop you. And Jeff is he's our poster child for a reason, but I think one of your biggest keys to success has been your mindset. So I'm kind of picking his brain for that. And then loan hacking. So just making sure, using Troy as our referral and our reference, making sure that you are setting yourself up now for your next one and the one after that, and building a good team, a realtor, lender who has that in mind, always your future in mind, forward thinking, so that you are not just focused on the deal at hand, but setting yourself up for success in the coming deals. So, yeah.
Absolutely.
Great. Jeff, walk us through strategies for house hacking that make sense in today's market.
Yeah, so obviously this is just a few of the strategies that you see on the slide. The ones that are working today are the rent-by-room co-living. Shout out Miller. for rebranding it as co-living with the orange book behind me.
I don't think, can he take credit for branding all that?
I don't know who came up with that. Yeah, maybe it's not. I'm just gonna shout him out anyways because we like.
No,
that.
one of our clients. I mean, where's that camera? 8 weeks ago, published a book on bigger pockets called "The Bigger Pockets Guide to Co-Living Cash Flow."
Yes.
And yeah, we helped him buy his first house like years ago, and now he's got 51 individual doors he rents across, I think, 7 properties.
Yeah.
51 or 55? Yeah, 50 plus.
Yeah.
51.
Okay.
I talked to him earlier today.
Oh, perfect.
Okay, so I'm like pretty confident.
Oh,
51.
good. As of today.
Yeah, but it's over
Awesome.
50. Like, it is impressive,
That is
and he's
impressive.
26 or something.
Yeah.
Yeah. Sorry, I cut you off there.
Yeah. So that strategy is working fantastic in the market because for a house hacker, you have to live in the property or on the property. Troy has not defined that yet for me, but you have to put your mail
shed.
there. Yeah, the
shed on the property.
They just say inside or outside the property as long as you're on the property. But the best strategy that is working is the co-living rent by room because you're really maximizing all the rent of every single space. You're renting out 5-bedroom house, rent out 4 rooms, 6-bedroom house, 5 rooms, and you'll achieve the highest return living there just because you're turning basically a single family house into like a 5 or 6 unit place. You get more rent per square foot. So that strategy is probably number 1. And then number 2,
Let me jump in there. It's not just that, like, you're right about that, but it's also, you look at the macro trends, like we are in such an affordable housing crisis that like the room by room model it's great as a house hacker, but it's serving a huge need out there in the market, not just in Denver, but across like most metros across the country.
Yeah.
Like it is, I think, going to be the next big thing for, what Airbnb was 10 years ago. Co-living will be the next kind of big thing in that space.
Yeah. And I think the demand for that is pretty high too.
Oh,
Obviously,
yeah.
you got a lot of people that want a room.
Oh yeah, because
So
you
that
get about
really helps
your
things out.
20. The demographics are usually 22 to 40-year-olds.
Yep.
So
So those haven't been hard to get
Right.
rented out.
Yeah, I mean,
At all.
they don't want to pay. If you want to do the quick math on it, it's basically take how much a 1-bedroom is, how much a studio is, and look at the studio prices, multiply that by 75%, more or less, and that's kind of like the base rent by room number for that market.
And Miller was sharing he's at a 95% occupancy is his average across his portfolio, so obviously very strong demand, and
Yeah.
95% occupancy is amazing.
In Colorado Springs.
Yeah, in Colorado Springs, you just, I mean, no one really achieves 100%.
Yeah.
But 95%, that's about as best as you get.
Oh yeah, and that's not. I'm sure there's a reason why it's not 100%. It's probably because he wants to maximize the return too. Because if you lowered it, I'm sure he could fill it all if you wanted to. And then number 2, I'd say so rent by room number 1, Section 8 for just normal, like 2 to 4 unit properties, just because they're in general, and I've said this many times, and Class A rents for Class BC type properties or units. So that also gives you the higher rate of return for a house hack or investor.
What is Section 8, by the way?
Section 8 is a federal subsidized program where a federal government pays 70 to 100% of, they call it fair market rents based on bedroom count, based on the family's income. If they're below the median income, they could qualify for a Section 8 voucher. Usually it takes 5 to 10 years, and they have all
Wait,
these
it takes
forms
5 to 10 years for what?
to get the voucher.
For the family or the individual to get the voucher.
Sometimes longer.
Yeah.
I've heard
And once
like
you have the
10.
voucher, then they can go use it to go rent
Yep.
a property from a landlord.
So, for example, you're married with 3 kids, right?
Yep.
So you would probably qualify for a 4-bedroom voucher. So that means once you get it, then you can shop around and go live in a 4-bedroom house or townhome condo. But you see the potential issue. A lot of times what you see is there's less people that have 4 or 5-bedroom places for rent. So those larger families actually have more trouble finding places than the 2 or 3-bedroom smaller families.
Oh, really?
Yeah. So there's like
there's more Section 8 inventory on the 2 and 3 bedrooms?
less.
There's
It's a tighter
4 and
market.
5. There's more.
Yeah,
Yeah.
Less
yeah.
inventory.
They have a lot more challenges to find. Like for example, the 4-bedroom families.
Yeah.
They almost have to just whatever they could find.
Okay.
Because it's because most people have houses just want to rent it to a normal family, not to a Section 8, and they'll just because they don't want to go through the paperwork. But 2 and 3-bedroom units, usually the market. There's more wider variance, so that's why you see Section 8 more in the smaller multifamilies like that. And then
Quick question though,
Yep.
Jeff. How long do they have to apply that voucher?
so usually
Once they get issued the voucher, don't they have a limited time frame to find a
Yeah.
property and identify it?
usually 60 days, and they could, and if they
short.
don't find it, they could sometimes get extensions of another 30 or 60 days.
But they're under the gun.
Yeah, and then
find a
if they run out of time, they go back on the wait list and they give it to the next person up, which is kind of crazy to think about. But that does, I mean, think
After
about
waiting years.
If you
Wait
wait
10 years, you got 60 days.
Yeah.
Yeah.
But obviously, that wait list is so big, right? And
Yeah.
we'll just give it to the next person that, So if they don't find anything, that's kind of. But a lot of these people that qualify, usually they're not coming from necessarily, sometimes shelters, sometimes living with mom in the basement, stuff like that. So they don't necessarily have experience shopping. Like, how do I apply for rental? Like, they don't really. Unfortunately, they don't have that necessarily. They're not teaching them that stuff, like application, like good credit score. Because they usually don't know how to do it.
Right.
So they're behind the curve there. And then sometimes they wait till like day 57 before they start looking.
Oh,
So you
yeah.
do see some of that lack of no sense of urgency.
So here's a question for you from the chat. Can a Section 8 tenant use their voucher in a room-by-room scenario?
Yes. So that's where most people don't know that, but they actually can use a rent by room, or like it's a 1-bedroom or studio type voucher holder. So yes, they could use it, but the question is, if you waited 10 years to get a 1-bedroom voucher, do you think you're just going to go live with a bunch of roommates? Because it would like almost put you in a tougher spot, right? Or would you just try to find a 1-bedroom unit for yourself?
Oh, I mean, trying to find
Yeah.
your one individual unit would be
Yeah.
plan A.
I would say that's market dependent.
Yeah.
So markets where there's a abundance of 1-bedroom vouchers, and they maybe go back on the wait list and all that, then that would be a great spot to propose it. Like, hey, let's try to have people rent rooms and go after that demographic. But unfortunately, Denver, there's not an overabundance of 1-bedrooms. So and they would rather, and they pay pretty good for 1-bedrooms, so they could easily find something.
Okay.
Good question. And then the other strategies are all great, the multifamilies and houses with like ADU or mother-in-law. And then the best part about the strategies is don't just rely on one. Mix and match. Don't say, oh, I'm going to go all in on Airbnb. I'm sure we have a lot of our investors that went all in Breckenridge and they changed the rules for Airbnbs.
Yeah.
And if that's the only way that works, that's a tough place to be in. If you have strategy one, A, B, C is one strategy, and you have no other backup strategies, then that's, I think, one of the big rules that we should all have is have strategy 1, 2, 3, 4, and you can pivot and adapt to different markets and different, if things change, the Airbnb regulations are getting tighter, I'm gonna switch to a midterm rental. Oh, midterm's not working, let me go to long term. Or long term doesn't work, let me try a section. You could adapt, and I think that's what makes every investor better.
Well, and not jumping forward too much, but that's also part of just the mindset.
Yeah.
How do you go out there and, hey, you have to adapt with the market, because the market does not care what you're doing or what you care about. The market do what it is, and you have to adapt to the market.
Yep.
All right, so we got 5 strategies: room by room, Section 8, subdivided single-family houses, 2 to 4 unit multifamily, and then places with ADUs or mother-in-law suites. And you've done all 5 of the strategies, right?
Everything.
Yeah. Love it.
And we've done loans on all those too. So
Yeah. All right, so let's talk about what's the best strategy for you. This is a question that we get all the time, right? Hey, what is the best strategy for me? What would you say to that, Katie?
It depends.
Oh, you got it right. Yes.
Yes, that is our common
That is the
theme
correct answer.
all the time. Yeah, it depends. It depends on your goals. It depends on what you're willing to compromise on. It depends on a lot of stuff, right? So
that's the beauty. There's so
Yeah.
much flexibility.
depends on your mindset.
Well, it depends your situation too, right? If
Situation.
you're single versus married
Yeah,
versus
we talk about
a
this
family,
between
couple kids.
the 3 of us,
Yeah.
right? The 3 of us were house hackers, and we were each doing it differently, based on our situation.
So let's walk through. So I know, peeling back the onion on here, there is a process. So Jeff, you're helping a new client come on here. When I'm going to ask you as a broker, I'm going to ask you as a loan officer next, Troy. walk us through like the decision matrix, help people figure out what's the best decision for them or best strategy for them.
Yeah, I would start at the number one, like top level. I really want to understand the front end is deal breakers. So I want to understand like, hey, what is like the stuff that you just absolutely like cannot have in this house hack. So get that out of the way, like what you don't want to start. And then we break out that, peel that onion off, right? And then we get more to the true details of like, okay, now let's talk about your goals. Like, okay.
Well, so give me an example. Like, what are some common, like, do not wants, or I must not have this?
I don't want to live in Aurora. I want to go live west of I-25 because I want to be close to the mountains. Pretty simple, right?
Yep.
Totally fine. That's totally fine if you want to do that. And then actually it helps both parties, helps myself as the broker, it helps them. Because now their buy box is more defined. So I'm not wasting time like setting up searches or going, hey, let's go check out all these ones in Aurora. Okay, well, now I'm only showing you stuff west of I-25. It makes it a lot easier for the buying decision. So I'm not showing them 50 houses. It's like brings it down to like hopefully 10.
Yep.
Yeah. Another one, we have a client who she's at a point in her life where she just does not want roommates anymore, right? Like I don't want to share my space. So that eliminates room by room strategy, co-living strategy. It also eliminates like the single family home unless there is a dedicated spot, an ADU, or she really is now narrowing down multifamily, living in one unit and renting out the others, right? So that's another big common one.
And the other piece I think on that would be, I feel like people do get too stuck on appreciation. Like they just think like, oh, I need to buy in a good area because that's like what we've been trained to think of. Like buy in a good area, it'll appreciate more. I want to find the next Highlands or Rhino type area, right? And everyone wants to believe that they'll be the one ahead of a curve. And I think that's also misguided front end goal because if we knew that answer, let's just say we knew that answer, we probably wouldn't, for one, we'd be buying up all the properties over there. Probably wouldn't share it with anyone.
Yep.
We do that one. Mm-hmm. We probably, have connections on city council and the mayor and all that, but that's so hard to project. Like Rhino wasn't Rhino. Like it wasn't, Katie remembers it back in the day. It was very scary. Yeah. Yeah, and it obviously turned, right? And just like the Highlands, that used to be a very dangerous area. You could find houses in 2009 for $122,000. I remember those days, and that same house is $780,000.
Yeah.
But no one knows that. So I think people get too wound up on that for like a very much short-term goal. It's like, hey, I want to find the next one. I want to get this appreciation. And I think it should be almost look long-term. I think that's where I have to like reset the expectations of look more real estate's a get rich slow game. Yep. 5 to 10 years, buy it, make the deal work today. That should be your focus. Like definitely try to make sure it cash flows, after move out. Don't buy like a break even or a negative deal, but more importantly, make sure it works. And if it works great, then you have the options of long term. Eventually rates will come down. Troy's going to call up Jerome Powell. He told me he would. And he'll drop the Fed funds rate.
You're texting them right now, right?
Yeah,
I'll fire
to
one.
Lower the rates. And eventually they will come down. That deal will be better. So it's like you make the deal work today because it's a great time for a buyer to make it work. Later on, it won't always be. It will shift again back to seller's market. And when the rates do drop, it will definitely shift back to the pendulum. And then when that does happen, now you can refinance. Now the deal's better. Now it's cash flowing. And then that's where you really make your wealth is make the deal work. Of course, cash flow is the number one focus, but the long-term appreciation, buy and hold for a long time, 5 to 10 years minimum.
Yeah. I would say, the rule of thumb is like, don't buy a property unless you have like a 5-year minimum type horizon. Yeah. A lot of it I've seen, and this goes back to like the 2008 great financial crisis. If you bought the top of the market, the very like tippity top, you bought the worst time. If you fast forward 5 years, you were ahead still a few bucks.
Wow.
And so going there with a 5-year minimum hold time, and that based on history, gets you in a safe position for any short-term, medium-term market corrections.
Yeah, and I piggyback on Jeff's is, buy it, make it work how you buy it. Don't plan on the refinance, hope for the refinance. Yeah. If the refinance comes along, bonus. Yeah. But if it doesn't, it's still going to perform.
Exactly.
There were people, and we're in the third year since rates went up. And 3 years ago, people were doing, I'll do 2 and buy down, then rates will be lower, and I can be better at that. And I mean, rates are not lower.
No,
it
didn't happen.
They were 3 years ago, and but they're higher than they were.
Yeah.
And some of those people are now in
year
tough
3,
spots.
heavier payment.
Yeah, and now they're jumping up and like, oh, I can't refi. And now the property's not performing like they were hoping it would.
Right. Exactly.
And another way to approach it is price is just one variable. People get too stuck on price. It's like, oh, my neighbor paid, or like this thing should be worth this. But the really number they should be looking at is monthly payment. What's the monthly payment? How can I lower the monthly payment? Seller credits, rate buy down, not the 2-1 buy. I don't like the 2-1 buy down.
No, permanent buy down.
Yeah, permanent buy down. Seller credits to do that. So have the seller pay for it.
Yeah.
Use the buyer market to your advantage to create the deal. Instead of just giving up and saying, oh, it's too expensive, it doesn't work. It's actually a fantastic time for buyers in this market that we haven't had price since, before you even got your license, Chris? Like, 20? I'm trying to remember, like, 20. Do you remember 2016, 2015?
Oh, yeah.
That was still a seller's market. So it's even before that, maybe like right post 2012.
I would say 2011, 2012.
Yeah,
I wasn't
that's
active in the market then, but
Right.
that was
Yeah.
based on the data.
Yeah.
That's what it seems like.
Yep.
Yeah. All right. What about? We want to look at too, like flexibility. Talk about, hey, is there flexible options for you, the property, on strategies you can do?
Yep.
And of course, just like you have to balance out like your circumstances, right? I mean, hey, a couple of years ago, Katie was single.
Yep.
Now she's married. So like, the house acting the way it used to no longer fits where you're at in your phase of life, right?
Right.
That's how it was for me. I did my first house hack 15 years ago now, and then now I have a wife and kids, and the house hack I did back then is no longer an option for me. So it all kind of comes down to like, hey, where you're at, and your life will change, and then adapt your strategy as the life and your market changes as well. What about establishing your buy box? I think this is something that's so important. We alluded it to very earlier about, make sure you don't have your don't wants. But what is a buy box, and why is it so important?
Me? So your buy box is just establishing your criteria for what you're looking for, right? So what locations do you want, or as Jeff kind of said, where do you not want? What do we definitely not even waste our time looking at, right? Can you share your space with a certain number of people? Yeah, I can have roommates, but only a few. Or nope, definitely I'm over roommates. Did that for a while. No more, right? And are you ready to move each year, become a minimalist, and stuff like that? So, it's just establishing the criteria so that you can help us as your team narrow in a location, the properties that we look at, and that we help you analyze to set you up for success.
And to clarify, we're not saying, hey, you got to have your buy box 100%, written in stone before you come talk to Jeff and Troy and Katie. Or that is part of the process here. A lot of times, hey, you talk with Jeff, you talk with Troy, you go walk a few properties. Hey, this sounds really good on a spreadsheet.
Yeah.
Or I saw Jeff and Troy and Katie talk about this in a webinar. And you go walk through like, oh, I do not like this type of property in this part of town. Hey, that's fine, great. We went out there, we did a date or two. We know it's not the right thing. Let's go out there and we add that. Hey, this is a do not want list, and we tighten down the buy box.
Yeah.
So it is an iterative process on there that you learn by talking to experienced people like us. You get that by walking properties, and you get that by underwriting properties as well.
Yeah.
So like I want to make sure like I don't want people get scared. Oh, before you talk to Jeff, you don't have to have your buy box defined.
Right.
We will help you define
Yes.
that.
Yeah.
For sure.
For sure. And because sometimes you don't know too. You don't know what you don't know.
Yep.
Right. So even time, people think like, oh, it might be fun to have a little DIY, and truth be told, you don't want to do it, or you don't have the time to do it. You just really need something more turnkey, right? So.
And we've had the full spectrum.
Yep.
Right?
Yeah.
We've had the people that's like, hey, I want to go in, I'll freshen up the carpet, the paint, I'll do all that stuff, and they're happy to do it. Others want the turnkey.
Right.
Go in, rent ready. It's already just get renters lined up or add renters.
Or some
to it.
people go out and they buy new build property, which is about as turnkey
Turnkey
as
as
you can
you
get,
can.
right?
Yeah.
Great. And we've had over the years a lot of professionals. They were been, high-end converting professionals. We're like, hey, I want to house hack, I want to buy real estate, but I don't want to go out there and do the work myself. And it also comes down to, hey, their hourly earnings are $40 or $50 or $100 an hour, and their time is better spent doing their profession than doing, something that's lower than that. And it all comes down to so many variables on it. And hey, this is the right move, the right fit for me.
Right. Exactly.
All right, so Jeff, let's talk about your last 30 transactions. And this is, I think, my favorite slide of everything because it shows what's working, and we're comparing from 2023 and 2024.
Yes.
So yeah, walk us through this.
So yeah, this slide's a great illustration because it shows since Troy passed, he talked to his Fannie Mae friends and changed the rules for 2 to 4 units. And by changing the rules, they allowed a 5% conventional owner-occupied loan that did not exist in 2023. So because of that, that's why you see the jump from 11 to 37%. And actually, I think 2025, Troy, if we had those numbers, it'd probably be even higher.
I bet
probably
you,
closer to
Well, yeah, because
50.
people have significantly less money down for the House Act, and they're able to repeat it as well. Yeah, I'm curious to see how 2025 turns out.
Yeah. And then ADU, you could see kind of the shift, the ADU, MIL or mother-in-law, almost that 20% there kind of went to the 2 to 4 units, right? Because now you don't have to buy the unofficial duplex. You could actually buy the real duplex with 5% down. And then condos, townhomes, that's kind of flattish, went up a little bit. And I think that's probably due to affordability issues with higher interest rates. And single family went down too. And I think a lot of that just went to the 2 to 4 units because now your strategies are more open now because you have more properties you could choose from. But now the boxes that are getting filled is because 2 to 4 units is more ideal, right? Because you get a duplex, you get like separate utilities, separate address, like sometimes like the garage in the middle.
Yep.
So versus ADUs and mother-in-laws usually is up-down style. You got to deal with the people above you. Like, hey, Troy, stop making all the noise up there with your cats.
Right. Knocking over lamps.
Yeah, exactly. And then condo townhomes, I think that one's still a little bit. Actually, I'm surprised that one even went up a little bit because the HOAs and insurance have made it condos and townhomes been more difficult.
Yeah, but I don't think we've had any in 2025.
No,
That was
I was
my
gonna say.
question.
Nobody's bought a
No.
townhome or a condo.
The numbers for 2025 will definitely
Be less.
be back down.
Are they going to be like 0 or close to so
Probably.
far? Like
Yeah.
for like a lending, I know for
I
house
haven't
hacking and then just normal primary. How many?
Hardly. No condos
Really?
so far.
Okay.
And maybe a few townhomes. But for house hackers, I haven't seen any
No.
townhomes come through.
No,
Yeah.
I mean some of them. I guess that's where a good real estate agent could help navigate those crazy
Like
HOAs.
Mr. White for sure.
And if you do, always a great note if you do go down and buy a condo or townhome, read the HOA docs.
Yes.
Thoroughly.
Every year, and I remember we had talked to someone earlier this year, Katie. I won't say his name, but he had used not one of our agents, but he used someone else, and they bought a condo townhouse HOA property a year or two ago.
Mm-hmm.
And then after they moved in, did all this, they realized, the HOA does not allow rentals.
Yeah.
Oh,
And
you
they
gotta
never
be
did?
Kidding me.
Yeah.
They never did?
They never read the documents. The agent never read it. The buyer never read it. And it was just like
geez.
catastrophic.
Yeah.
And the person's like, well, they put them in a bad spot. So like that is an extreme.
Yeah.
But
It is.
read it for things like that because I mean that is there's very few HOAs that don't allow rentals. But hey, if you get that 1% that doesn't allow, well then you're in a tough spot. And of course, talk to people like Troy to make sure like the financial health
Right.
they're healthy from a financial standpoint as well because that's a very important thing
That's
now
an
too.
issue nowadays too with these condos. Which condos are eligible?
Well, that's the thing, the eligibility, right? Like, because there's an HOA, they can vote on it, so it can change at any point.
Right.
So I have one of my properties is in a community that is, they decided too many investors own in there, so they basically changed the rules that there's a percentage of how many have to be owner-occupied properties and how many can be investment properties. So they've put like a cap on it. And now if you want to rent in that community, you have to go on a wait list.
Even if you already currently own there?
Everybody who was currently, so if you currently rented, so I was always a landlord in there and was always renting. I got grandfathered in as an investor. But if I had not been already renting and I then wanted to start renting, I had to go on a wait list, even though I've owned the property in there I had at that point for 7 years.
Wow.
And they voted on it and it passed. And so now if I go to sell that property, I have to disclose that this is not a property that I can sell to an investor. I have to sell to an owner-occupied person. And then additionally, I hear that, these HOAs and complexes, like, they have to fill out this paperwork that says that they allow it or they don't. And sometimes they just don't file the paperwork. So your loan isn't going to qualify simply because your HOA hasn't filed a stupid piece of paper, right? Or,
Yeah,
correct me if I'm oversimplifying, but...
Yeah, I mean, we definitely have to get a fair amount of paperwork on a regular basis to make sure that they're still eligible. So there can be a lot of caveats to it, whether it's going to be warrantable is what we call it in the industry.
Warrantable, there you go.
Versus unwarrantable or non-warrantable condo complex.
Yeah.
Which is painful. I had a conversation with a client today that's wanted to buy first time. I don't think he's really going to be, he's kind of house hacking a little bit, but I had to talk to him very much about the condo situation because a lot of them aren't eligible for it. But that's kind of new news with the limitation or preventing you from making it into a rental.
Yeah,
Jeez,
and
that
they
can
put
be-
it up and they voted on it, and
So they moved the goalposts, on you.
Yeah.
If you hadn't been grandfathered in, you'd be in trouble.
right,
Yeah.
exactly. So
All right, so predictions for 2025. You think 2 to 4 units will be
Higher.
Higher.
Okay, so everyone says higher.
Yeah, we're going to do the over-under.
Yeah. ADUs, MDL splits, high or lower, or same?
I think same.
I'm going to do about same's within 5%.
I'll do higher. I'll just be contrarian.
All right. Condo
Uh,
townhomes? Lower. I think-
Lower.
I think we all get consensus on that.
Lower
one.
for sure.
Single
Family is going to be
homes.
up from 13.
Yeah,
I'll
say
definitely
I
higher.
think
higher.
up too.
Well, I think especially too as co-living becomes more and more popular,
Yeah.
and as people get more in there, like I think we'll see that come up a lot more
Yep.
too.
Yeah, I think
So,
that
all
makes
right.
sense.
Yeah. Well, we'll check back in
1
6
year.
months or 1 year and see how it goes, right?
And really, the single family and the ADU MIL kind of
Same.
are single family houses.
They're all single family.
Yeah,
Yeah.
they're really. So you've got 46%
True.
that were going as single family, but they just had that added feature.
Yeah.
Which is helpful.
Good clarification. All right, let's go through some examples of different strategies. Now, I know these are real client examples. Jeff, we'll start with you since the first one is about one of your recent house hacks.
Yes. So the way to look at it is our most recent one was a triplex that we closed about a year ago now. July 3rd. I'm not counting. And
Who's counting, right?
What was did that close? I think at 3:00, right? On July
Yeah,
3rd?
I think 3:30 p.m. No,
It was in
I
the
don't-
tech center. I remember that. Yeah.
And it basically, the nice thing about that is all the years of experience, right? Because we've done, started with just normal market tenants, added Section 8, added rent by room / co-living, threw in a little Airbnb for fun, spiced it up a little bit. And
Why not?
basically, each of these strategies, we didn't start off saying like, I want to do all the strategies at once. We just built up our toolbox so we could handle each property and apply the best or highest and best strategy for that property. And by doing so, we got to this triplex. It was pretty straightforward. It was like, okay, it's side by side triplex. One was a 2-bed, one was a 1-bed, and the other one was a 1-bed. We took the end unit 1-bed and rented out the other 2 units. And because over in that spot of Southwest Denver, the highest and best use at that time was Section 8. So we filled it with 2 Section 8 tenants. And we are achieving about 37.50 per month in gross rents, and the mortgage is 35.50.
Yep. So it's
Out of
That's
six.
for renting out 2 units.
Yeah.
Yep. So it was
Living
covered
there.
while you're living there.
Yeah.
The payment was covered.
Right. So full payment covered, and the day we well, it will cash flow at a 6.75% rate, Chris.
Wow.
So even in a market that high interest rates, it's still possible to do deals. You just have to look at it again, break it all out. Like what's my monthly payment? What strategy works best for this property? How could I achieve better cash flow? How could I make it work? Ask those questions. A lot of deals don't work, but some deals do work. And the best investors are ones that buy no matter the market. They don't look at good markets, bad markets, they kind of dollar cost average, to steal the stock market term. And so that's a little bit about my strategy.
What about Caesar?
Caesar,
Caesar was North Arvada,
Yep.
bought. And
fourplex in December.
Yeah, did some updating. That one had
hands-on.
been that was like the first fourplex we did with the new
Yeah, he
program.
actually did the first.
So he's a
Fannie
little
Mae
bit
loan,
of ground baker on
And
that.
he was more hands-on. He had a W-2, but he was okay doing the work. He was okay fixing it up. He was okay dealing with bad tenants and turning them over and cleaning it up and remodeling, painting.
The renters were very stale because they had been there forever and never
Yeah.
been raised rents. But the owner of the property never did improvements
Nothing.
either.
Zero.
So it needed a lot of
Oh, yeah.
updates.
And he had the time to do that as well.
Yeah.
And willingness.
Yeah.
So his
Desire.
buy box was perfect for it.
Yeah. He was okay, like, fixing it up. So that worked
He
out.
created value,
Yeah.
for sure.
He was more of a, true DIY. And then Ganesh, he's just more of our poster grandchild? Is that what it is? Because I like to be the poster child.
yeah.
So he's just rinsing and repeating, right? So he started living in my basement, very smart guy, and saw, what are you doing? Like, you rent all these rooms out? And then said, like, I want to do the same thing too. So then I, said, okay, you don't have to live in the basement anymore if you buy a place. And then, just kidding.
Right?
I'll allow you to leave the basement if you buy a place, right?
And not only did he do that, he bought several.
Yeah. So he started with
He's
one.
on his,
He's four.
Going to four.
Going to four.
Going to 4 and
So-
wants to beat out Jeff.
Yeah, his
Love it.
goal
I
is
love
beating
it.
Jeff.
So what's
we may
great?
do it.
Yeah, he has the desire and motivation. But basically, I started with one, saw the power of it. He lived there, saw the power of it, and said, like, I want to do rent by room in Westminster. Started with the first one, and then waited basically 1 year, did the second one, and waited 1 year, did the third one, and now is almost ready for number 4.
Yeah.
And what's great about him is he just sees it as like, hey, I'm not going to house hack forever. I'm just going to use it while I have it. The flexibility, going back to what we talked about, the flexibility, the time, the desire. And he's, kind of in between, right? He's very aggressive, but he also is patient and very smart buying in the middle of winter. So it's a great strategy to buy then because the competition's way lower, so you get a better deal every single year.
Yeah. Another place where he really super stood out is that he had all the work lined up to be done before he even closed.
Yeah.
So shortly after he closed, the work was completed because he added some rooms to one of the properties he bought, and he had the places rented out, the rooms rented out prior to even the first payment having to be made.
Yeah.
So talk about efficiency too,
Yep,
because he
preemptive.
was very on top of it and aggressive, right? Aggressive with the buying, but also aggressive with getting the work lined up and getting the rents lined up. So he didn't miss a beat and super efficient.
He used that to his advantage. Like, oh, well, the place is vacant. Let me ask permission from the listing agency if I could use the photos and get this thing pretty much
Pre-rented.
show it pre-rented
Almost.
before like the day I close. I already have a few tenants in mind. So when his first mortgage comes, a month and a half, 2
He already
months
had
away.
rents.
Exactly. So he was
On deposit.
doing a great job of playing.
Yeah, that's such an awesome story.
Yeah.
Yeah.
What about Carly?
Carly is our girl. She's
She's another standout. For
yeah. She actually she also lived. She lived on a little back carriage house. And then
She's one of your tenants originally.
yeah. Well, no, she dated my wife's brother.
Okay.
And then same thing. She saw what we're doing. It was like, hey, I want to buy my own place. The difference, though, is she did not start off. She wasn't like a software engineer making, $200,000, right? So she worked nonprofit, and usually those jobs pay the worst. But we need those people. So thank you, Carly.
Yeah, absolutely.
And she did same thing, almost very similar to Ganesh, like super aggressive, but started off just slow, slow and steady, where she started off in a little townhouse, turned a 3-bed townhouse to a 5-bed, did rent by room, lived in one room, and then leveraged that, saved up for the next one, and then bumped up to a single family house, still sticking with rent by room. Now, and then the third one, she bought the duplex. So you can see each stage she's gotten better as an investor, but also bigger
More.
buy box
Yep.
because now she qualifies for more without having to quit her job or try to work all this extra
Yeah.
overtime.
Her income never changed.
Really, yeah, it's basically stayed the same.
and irrespective of the rates too.
Right. Yeah, the rate's actually been high the whole time since she's bought. So it
Higher
wasn't
with the
like-
duplex than what it was with
Yeah.
the first townhome.
Yeah. And it wasn't like she bought in 2020 here. It was everything was 3%.
Ideal,
so,
and
yeah.
everything worked. Yeah.
So yeah, I mean, you can see the similar elements of everyone here is like no one just said like, oh, I'm just gonna wait for the home run deal. Like I'm just gonna I'm gonna be the special one that finds a home run deal off market, my flyer in the mail, and I'll convince Chris Lopez to sell me his fourplex for $500K. And
Slow down there.
It's not gonna happen. So all these people just bought straight off the MLS.
Yeah.
Didn't look at it and looked at the long term. Like what Chris said, you have to minimum 5 years, I would say, because none of these people are flippers. None of these people, all of them had jobs. Every single one of them had jobs. All of them did it on a part-time basis just to get started, use their flexibility while they had it, and acquired multiple properties without necessarily making the highest of incomes, and buying mostly rent-ready stuff too, except for Caesar's one's a little more beat up, but he was okay with that. So each of them had specific goals, and they stayed within their buy box, but also was willing to do what it takes and be consistent, not quit their job, and save for the next one, and kind of look at it over more of a year's perspective instead of like a couple days.
And that's the whole point here, is sharing these 4 different case studies. Is they're all different people, different phases of life, different things going on in their life, and they all found the right properties, the right strategy for them. And they're all out there executing, and they're building an amazing portfolio that's going to be, multi-million dollars of equity in 10, 20 years. Like, it's great.
Yep.
So let's move on to talk about mindset, because this is so important for not just success in house hacking, but success in life. But let's talk about mindset for house hacking.
Yeah, I'll start, I guess. You have to kind of look at it. More perspective is just being patient and it's not like going back to what I said. It's not get rich quick. It's not Bitcoin. It's not sexy. It's kind of just like very slow. Just you can't like, hey Chris, I could live with 5 roommates. It's not something you brag about at parties. Not something like, Chris, I caught a big spider in the basement. Let me show it to you. Like, he doesn't care about that. He doesn't want to hear that story. So it's more like you keep it to yourself, but actually during that time you're growing, you're learning it. Like, it's almost like investing with training wheels, and then you get to like a normal bike, and you're not risk free, but you're mitigating a lot of the risk a lot of investors have, because you're on site. You're literally on site. You could manage things much better than any property manager can, because you're there like 24/7, not 24/7, but basically you sleep there at night. And then you learn your systems, you learn how to become better, you learn to optimize, and overall, like, that's really the big thing with the mindset, is you're not taking it all in of like, oh my God, it's gonna be so overwhelming. You learn it in stages, and you're patient, and overall in the next 5 to 10 year journey, you'll be so much further along than the day you started. And the reason why that is because you stuck to a plan, were consistent, and didn't try to venture out or go outside that. Like, hey, let me try a little of this fix and flip business. That looks like easy money. You were consistent and used your job to help you acquire multiple properties.
I think another standout too that I've seen is some of these buyers and clients that we've worked with several times have gained confidence, right? I mean, have you seen the confidence grow in them?
Absolutely.
To where they, like, I can do this. Like with Sean, he'd come to some of our meetups, and I remember him buying his first single family house with an ADU, and just his confidence of getting the contractors in there to do the work, with how he's managing his renter, with the Section 8 that he's got for the main house, and just that confidence level. And Ganesh is another one. And so these guys are building confidence, knowledge, confidence. They've got the tools, the knowledge and experience now under their belt, and so they're growing in the right direction, for sure.
What'd you got on there, Katie?
Yeah. For me, I think the mindset is really about wealth and like generational wealth. Like, I always tell people that my story is I've never had a job that gave me an option for a 401k or a pension or another kind of retirement plan, right? So I had to figure that out on my own. What does that look like? And real estate clicked for me. And so even where I am now, if I did nothing else, I have 5 properties, right? And nothing special about any of them. But I look around, I'm 37 years old. My friends don't have 5 properties.
No.
They don't have, they don't have the knowledge. And
Are they still renting, Katie?
some of them are. We've had these conversations.
But I mean, you fast forward 20 years, it pays off. That's $8,000-$10,000 a month in cash flow.
Exactly.
And I mean, you can live off of that.
Exactly. So
sure.
and that's why I started this, and then I happened to meet like some great people, and so it expedited things for me, luckily. But to me, that's kind of what it's about, like making that short-term sacrifice for the long-term, like, wealth is what it is. Not just money, but the wealth.
Yeah, because even if you did nothing else, you're going to be stellar.
Yeah. And then hopefully...
You're on a roll, Troy.
Like, stellar. Yeah. And hopefully legacy properties too, right? Hopefully that pass that knowledge down too. So
Or you could be in a position like Chris where you get a little bit of an opportunity. It's like, okay, maybe I'm going to change gears, but you've got this equity to play with and work with, and it's a good problem to have.
just allows me a seat at the table, right?
Right.
Where
Oh, yeah.
I wouldn't have had that before.
So talk about comparing this $35,000 down payment in the 401k and kind of talk about 2 parallel paths. Now, we're not giving financial advice here. We're just doing a very, very simple model to help show the power of house hacking and using leverage. So, Jeff, was this your slide or Katie's slide?
Troy.
Troy, oh my gosh, that was way wrong.
Talk about passing the buck. All right.
Troy, talk us about this stellar slide here.
Yeah,
Yes.
so it's very high level, very simplified, but a simple 35K in the market, right? And you get a 10% return, which we think is pretty aggressive, right? Yeah. They say the average over how many years has been 10%, but we all know that can vary pretty widely. But if you're doing 10, that's great. And so that's $3,500 for that 35K. And it's kind of looking at that 35K as the down payment and closing cost if you had to pay it. Jeff didn't negotiate a nice seller concession to cover that for you. So if you did do a $500,000 house with 5% down and 10K, that's about $35,000, right? And if you do 1% appreciation on that $500,000 house, and you're paying down the principal balance, you're having renters, rent by room, help you pay it down. Now, it's a little bit of a job, so you got to account for some of that. But there's a $6K differential in there, and that's just for 1 year.
1 year.
That you can see. So, do you want, when you go to somebody and say, hey, do you want 10% return on your money or 1%? They're like, 10%. Well, not so fast, because that 35K can definitely do something significant for you. And everybody needs housing, right? So it's not like it's going to evaporate, go away. It's always going to be worth something.
And when you actually look at like the true return on there, hey, $35,000 in, but $35,000, the great thing about real estate is you get to use leverage, right? Mm-hmm. We get amazing financing for people like Troy, where we can use high leverage out there to go out there and buy an asset, and that has a huge amplification effect on our returns, because, hey, now you control a $500,000 asset with $35,000 down, where if I buy $35,000 of S&P, I own $35,000 S&P. I don't have that leverage magnifier on there.
Right. And it doesn't take into account the other positive aspects, which is, does it positive cash flow eventually or more down the road? And then on top of that, you got the tax benefits. You get the write-off, the depreciation, the different things you can do on the tax return that can benefit you, which Jeff is well aware of.
Yes, absolutely. What I like about this slide is it shows that if 1% appreciation on a house, right? That's pretty freaking.
That's
really,
mild.
Yeah.
Pretty
Super
conservative.
conservative, I think.
Well, our historic average in Denver is 5 to 6%.
Yeah, what was our last
annually.
monthly meetup? It was
Yeah, and
like
national
4-ish
average is
still.
3.
Yeah.
National average is 3. Denver usually outperforms that. It's between 5 and 6 usually.
Yeah. So we
And
think
Chris-
we're being super conservative.
Chris will know this. When could you pull the money out of 401k versus if you sold a house? How long do you have to wait for 401k? Is it 59 and a half or
59 and a half is
Yeah.
the
Earliest.
when you can draw without any like early
Penalty.
withdrawal penalties, or some of those like special use cases for pulling money out where
Yeah.
you can do it like tax free.
Mm-hmm.
Yeah, where you get a lot of flexibility.
Yeah.
Now, hopefully, ideally, in a situation you can do both.
Yeah.
Stocks are great, houses are great, real estate is great, but it really helps to show you when you look at wealth building and look at your situation, how you go out there and deploy your capital. And the great thing about house hacking real estate, you can deploy your knowledge, you can deploy sweat equity, you can deploy, your time in there. Where I tried day trading the stock market. Doesn't matter. I did not get,
How'd it go?
not good. That's why I'm in real estate now.
How many screens did you have up?
Oh, I had four screens.
Four screens
I had
simultaneously?
I had the cool setup. The problem was I didn't make money off of it.
Right.
I mean, real estate's been, just so much more profitable and also so much easier where, the stock markets, it's a hard game to be an active investor in. And again, I still have lots of money in the stock market, just invest and let it ride. But if you can use your time and knowledge and go to meetups and go talk to people and learn, I can get this type of financing from Troy, or I can go and get this IC strategy over here from Jeff, like the amount of impact it has on your wealth building is just, is so much higher than just a lot of times investing in stocks and other assets.
Right, yeah, where you're more active
Yeah.
in it. You're not so passive.
Where you get the trade-off for it, where I was active in stocks, I did not get I actually made worse returns if I just had left it in an index fund. Right. In real estate, you put active time in there and sweat equity, vast majority of the time, you get a great return on that.
Exactly.
And where can you do the levered appreciation? Where else could you get basically loan to hundreds of thousands of dollars of a loan just by moving into a property? Because you don't get that for stocks. You can't. I don't know if anyone's figured out a stock hack where you could borrow that much of. I think on margin you can't go that high.
No, because that house of cards can fall really fast.
Right.
Yes, for sure.
All right, Troy, this is definitely your slide. Let's talk about loan hacking here, because this is super important.
Yeah, absolutely. So I think the biggest emphasis we've always talked about is the getting pre-approved, right? It's always figuring out what you're capable of. How much horsepower do you have? How much are you capable of buying? And then taking that and translating it into the buy box, right? What does that look like? You can definitely qualify for more of a duplex, a threeplex, and a fourplex than you would a single family home, right? But knowing that buy box, figuring out at least what the minimum is going to be, and then operating within that. So, all the different optimization for down the road too. So how do you deploy your money now for the first one? How will that subsequently affect the next one? Making sure you're in a good position, because you can paint yourself into a corner real quick. Utilization of an FHA, when does that make sense? When does it not? Because you can't have multiple FHA. For those few that have a VA, that can come into play. So, the existing properties, Jeff and I are working on some stuff now, but he's a perfect example. All those existing properties have an impact. So if you're coming in with a clean slate, no properties, there's how you look at that is way different than, okay, I've got 1, 2, or 3 properties like Katie still. We have to analyze those other properties and how do those impact your DTI and so on and so forth. So again, pre-approval, regardless if you're a first time or multiple house hacker, is very important. Income types, evaluation, obviously that needs to be determined. What reality is, what I've always told people, and Jeff and I have talked about this many times, how underwriting looks at it is way different than how it may actually be in real life. So, you're not everybody's super knowledgeable on all the Fannie Mac, Freddie Mac, FHA, VA underwriting guidelines. Mm-hmm. So that's where I kind of come in and can take what you have for your information, interpret that in, and see what that does for us on the loan side. And then just solid, knowledgeable team. You need to make sure. We've had a few of these over the years where, for whatever reason, not common knowledge with how to finesse some of these house hackers into their financing and get the financing put together. So even though we all abide by the same rules and have the same underwriting guidelines, I don't have anything really super unique, but just having some depth of knowledge, having a good team behind you, and ability to find ways to strategize or to kind of loan hack, as we've called it, to set yourself up for the best success. Like with Jeff, he's another good example. He's always the poster child, but we had a tax return that he was getting ready to file. We went through, analyzed it, optimized it. He wasn't taking all the deductions because he wanted to make sure he could qualify. So we said, hey, you're cool. Take all those deductions, save $12,000 in tax payment, and still qualified to buy your threeplex. Yep. So it's just some of those things to help you save money, help you get the property, save money, just making sure we're checking all the boxes. So long story short, get pre-approved.
What are common mistakes you see people make as they go out there and look at their loan? Like, what are common pitfalls you could help them avoid in terms like, hey, when do I talk to a lender or look for this? Like, what are some common?
Yeah, I think a common thing is getting out ahead of yourself before you kind of know what you're capable of.
What do you mean?
Going out and looking at properties or kind of evaluating properties, analyzing properties, and you don't even know if you qualify. So that's why we've always emphasized the pre-approval. It's easy to go look at properties. I mean, I'd love to go shop for some exotic cars, but I wouldn't want to live with the payment or the insurance, right? So, understanding what the cost is going to be, and that's part of the analysis that Jeff does when you're analyzing a property is, is this going to break even or cash flow? How's that loan payment going to look? And some borrowers we've had have maybe soft credit scores that need to be optimized, and that's going to affect the pricing. It can really impact you heavily if your credit scores are sub 720 and you're trying to do a Fannie Mae Freddie Mac loan. The rate's not going to be horribly affected. It will be to a degree, but your mortgage insurance gets outrageously more expensive because it's higher risk, and so you get charged a heavier mortgage insurance fee for putting less than 20% down. So we've had several situations where we come back through and it's like, okay, let's do a few little tweak outs. Katie's a good example on the credit side. So getting pre-approved, we look at the credit, we optimize the credit so we can put you in the best financing position possible. So, and some of the mistakes that have been made, sometimes underwriting, I've seen a few deals where we've picked up and cleaned up and got it closed where they weren't analyzing the departure property correctly. They weren't looking at different ways of optimizing the income for the borrower. Do you bring in a co-signer, when to bring in a co-signer? And again, some of that stuff needs to be ironed out before you're under contract. You've got all that stress laying down on you. You're trying to get this thing closed. You've already spent money on an inspection. It's kind of, to me, it's unexcusable to have mistakes with respect to credit, income, and assets. It's one thing for the property to have issues, right? But to have issues from the borrower side with the credit, income, and assets is not a good thing. So trying to minimize that as much as possible. So having solid, knowledgeable house hacking experience for your lender is important.
All right, so as we wrap up this second of our three-part webinar series here, key points to focus on here is really make sure you understand what your goals are and define your buy box. Again, you don't have to have it, 100% clarified from day one, but as you go through the iterative process of learning, researching, walking properties, underwriting, really narrow down your buy box. This is so important, not just for you, but if you don't know what you want, no one can go out there and help you get what you want. And I've learned that lesson many times in our life. So, hey, the clearer you are, the more likely you are to get what you want, and I'll set you up. And then mindset. Mindset's an ever-evolving thing that people evolve on. Hey, we all have our strengths, we have our weaknesses and mindset, but go out there and work on your mindset so you can go out there and be successful in real estate. Because as seen the last couple of years, real estate is amazing, but you do go through tough times, either from like the market, changing like it did, or from a tenant, destroying a property. The happy hour just came from, I was talking to one of the investors there, and they have about a bunch of multifamilies, and they're like, yeah, every time we turn a unit, it costs us $7,000 to turn a unit. And it's like, hey, they have to adapt to that and deal with it, and then change your mindset to then, reduce that and hopefully not have as many of those. So work on the mindset and understand that you need to be flexible. Be flexible in the market. I was not real estate investing in 2008 when the great financial crisis happened. I started in 2011, but I had a business then, and I was like, oh, this works. Well, it worked until the market changed, and I said, oh, well, I'm going to keep doing this. Well, I did that for like 18 months and spun my wheels, and it was miserable. And the market just did not give a damn that, hey, Chris Lopez is still doing X, Y, Z, but the market is doing now A, B, C, right? Like, so be flexible with that, because in real estate, it's always a matter of when, not if something happens. The market, a tenant, a lifestyle change, whatever it is, something will change for you, and you need to be flexible and adapt to it. And also, it's having a really important team. I think the most underappreciated person on the team is the lender. Because a lot of times we get boxed into, oh, well, who's got the cheapest rate? Oh, this person is 1/8% cheaper than Troy or cheaper than this person. And there's so much more than what they do is just provide a rate. So understand, make sure you have the right team, but really make sure you have an excellent lender out there as well. And also, make sure you plug in the community here. I think a big reason we've had success, so many clients have had success, is it's not just knowledge, it's not just expertise, it's not just sticking around. It's because we get together, we communicate, we share ideas, we learn from each other. And that's why we have a ton of resources out there where every month we do meetups. They alternate between an evening meetup and a morning meetup. We have resources on the website with the toolkit. Just a few months ago, can you grab that book behind you, Troy, or Katie? Yeah, I mean, this is what I think 2 months ago at best now.
Yeah.
It's old. We just published this book, The Ultimate House Hacking Guide. And this is, I mean, all 4 of our combined knowledge written into, I think, 200 and some pages of like, hey, here's what we distilled over, 10 plus years individually, so 40, 50 years of knowledge in there about house hacking, about the market. Like, read the book. So if you want a copy, come to the meetup, reach out to one of us. We get copies with us. We all carry copies in the trunk of our car too, right?
Yep.
You guys do that?
Oh, yeah.
Yep.
So like
Down
we have
there.
books, so like come plug in, meet with us, learn, network community. And if you guys want to connect with Troy, we got the contact details up there, QR code, and all of our respectives. But go out there and connect with everyone here at the table, connect with other investors around town, around the community, because that's also such an important aspect to success. All right, guys, you wrap up. Any final thoughts, any parting thoughts of wisdom or nuggets you want to drop before we wrap up?
The journey is long, but it goes by fast. And it's a worthwhile journey for each of us. We all have our stories to tell. But if you do it correctly and you have a great team, like Chris just alluded to, it'll be the fastest 5 years or 10 years of your life. And by the end of that 5-10 years, if you have 5 to 10 properties, there's your retirement. And then you don't have to worry about Bitcoin or the next NFT or AI or losing your job. There's retirement, and then go into that fact where you're not relying on anyone but yourself is a good feeling.
Yeah.
I don't know how you can back that.
I would say
I
that.
know.
How can you follow up on
can't
that?
follow up on that one.
Yeah, that's pretty
So,
good.
Awesome. Well, Troy, Katie, Jeff, as always, thank you guys for showing up. Thank you for all the work. Thank you for all the materials and resources you provide. And people out there, thank you for watching and listening. And again, connect with us. Come to the meetup. Come to our next webinar. We are here to help you do a deal and also help you be successful in real estate investing. So have a great rest of your day, and we'll see you soon in the meetup. Bye, everyone.